Hi friends, I welcome you to the next video. In this video we'll learn BRS fundamentals part 2, bank reconciliation fundamentals. Before we learn how to prepare bank reconciliation statement, we have to learn some fundamentals. Now in this video we'll learn how to record entries in the books of the business and in the books of the bank for the various transactions which take place between the business and the bank. Okay. If we have clarity on, if we clearly understand how different transactions are recorded by the business and by the bank, we'll come to know why there can be a discrepancy in the balances shown by the books of the business and the balances shown in our passbook, and the need for preparation of the bank reconciliation statement to explain the differences. Okay, let us start learning how to record entries. Cash deposited. What is the entry we pass in our books when we deposit cash? The entry is bank account debit to cash account. This is the entry we pass. Now the question arises, on what date or on which date we pass this entry. This entry is recorded on the date of deposit. So whenever we deposit the money, on the same day we record the deposit of cash in the cash book. We record a withdrawal or we record a payment in cash column and deposit in the bank column of the cash book. We record a deposit in the bank account and record a payment in the cash account. Okay, so this is done on the same day, that is the date of the deposit. When will the bank pass an entry? So when the bank receives the cash from you, cash account debit. Now who is giving this cash to the bank? Customer is giving the cash, so customer account will be credited. Customer account is nothing but the passbook, so our passbook will be credited only on the day when the bank passes this entry. So generally, when will the bank pass this entry? On the date of deposit itself. So this entry is normally recorded on the same day in the books of the business and also in the books of the bank. So this transaction generally is not a reason for the difference in the balances that may be shown in the books of the business and in the books of the bank. Now, cash withdrawn from the bank. What is entry we record? Just an ulta entry or an opposite entry we are going to record. We are withdrawing cash. So cash account will be debited, real account coming in debit. Who is giving the money? Bank is giving the money, so bank account will be credited. When will we record the entry in our books? On the date of withdrawal. So whenever we withdraw the money, on the date of withdrawal we are going to record this entry. What is the entry the bank passes? Customer account will be debited and it will pay cash to the customer. Customer account will be debited and cash account will be credited. Customer is the personal account, receiver debit, cash is going out, hence credit, real account going out, credit. When will the bank pass the entry? On the date of withdrawal. So again, if you observe, both these entries are recorded on the same day in the books of the business and also in the books of the bank. So the balance shown as per the books of the business and the passbook should tally because the transactions are recorded on the same day. Okay. Next, check receipt from customers. When the business sells goods on credit to customers, or when the business sells goods to customers or provides services to customers, the customers may pay the money in the form of a check. So we have received various checks from customers. So what will we do? So as soon as we receive the checks, we have to pass an entry in our books. We pass the entry bank account debit to customer's account, or to avoid confusion, I'll use the word debtors. So debtors are the people who owe us money. Debtors are giving us money. So this is the entry we pass as soon as we receive the checks. Now, when is this entry recorded? This entry is recorded on the date of receipt of the check. So we record this entry on the date of receipt of check from the customer. On the date of receipt of check, we are going to pass this entry. Now, this entry is based on an assumption. We are assuming that on the day when we received the check, the same day we have deposited the check in the bank, and the bank also could collect money on that check on the same day. Okay, so based on this assumption, this entry is recorded on the date of receipt of the check. We are assuming money has come into our bank account and money has flown out of the bank accounts of the customers who issued the check. When the customers issue a check, what happens is the bank of the customer will give money to our bank account where we have deposited the checks. So there are two parties here, business and the customer. We are assuming that on the date of issue of the check, when we have received the check, money has come from the bank account of the customer to the bank account of the business. We are assuming that, okay, and we are passing this entry. Now, what will be the entry in the books of the bank? The bank will pass the entry, customer account will be credited, when will the bank credit the customer account? The bank will collect cash for us, no? The bank will collect money from the other bank. Okay, now whether the bank will collect cash or whether they will get it in a wire transfer, we are not bothered about it. We are bothered about the credit in our account. We want the passbook to be credited. Okay, so when will the bank pass this entry? The bank will pass entry only on the date of collection of money on the check. That means what will happen is, when we deposit the money in our bank, this is our bank where we have deposited the check, our bank will present the check to the bank of the person who has issued the check, issuer bank. The bank which has issued this check, the customer has issued a check, our bank will present the check to the issuer's bank account, issuer's bank, that means the customer's bank who has given the check to us, or the debtor's bank. Okay, and then money will come to our bank. So check will go not in the physical form, it's digital copy. Our bank will present the digital copy of the check to the issuer's bank, to the bank where our customers were holding the bank account, and money will flow from the issuer bank to our bank. This process will at least take 3 to 4 days. Sometimes it can be completed in couple of days as well. In the case of outstation checks, it may take 7 days time as well. That means there can be a gap between the date of deposit of the check and the date of collection of money on the check. So this entry is recorded only on the date of collection of money on the check. So these entries are passed on different dates. Let us assume we received the check on 1st April and on the same day we have deposited the check in the bank. The check is presented to the issuer bank and money comes to us on 5th April. Now, in the books of the business, entry is recorded on 1st April itself, whereas our bank will record the entry only on 5th April, that is the date of collection. Please bear with me, my handwriting is not good. Date of collection. So there can be a gap between the day we pass an entry and the bank passes the entry for the check. So if you go between these dates, there will be a difference. We received some checks. We deposited the checks on 7th April 21, date of deposit of the check. Money comes to us Money comes to our bank account, date of collection on 10th April. We pass entry, the business passes entry in its books on the date of deposit, on the date of receipt of the check. Bank passes entry on the date of collection. So in between these dates, that means in this gap, there can be a difference in the balances shown as per the books of the business and the books of the bank. Such differences are explained by preparation of a statement called as the bank reconciliation statement. Next, check issued to suppliers, vendors. So whenever we issue a check to a supplier or a vendor, we have to make payment to our suppliers, vendors. We are issuing a check. What is the entry we are going to pass? We are going to pass the entry suppliers or creditors account debit to bank account. Now again, when is this entry passed in our books? This entry is passed on the date of issue of the check. So we are assuming on the date of issue of the check. I'll write DOI, date of issue. So if I issue a check on the same day, I am going to pass this entry in the books of the business. Supplier account will be debited and bank account will be credited. If I don't record this entry, I will not be able to track how much balance is there in my bank account considering the number of checks issued. Let us say I have only 10,000 in my bank account and I issue multiple checks and I don't record them. In such case, what may happen is we may issue checks, and when the checks are presented for payment, there may be no balance in our books of account, in the bank account. That is why whenever we issue a check, we should record this entry. That will help us to track what is the balance in our bank account after every check which we have issued. So this entry is recorded on the date of issue of the check. We assume that we have issued the check, the supplier has taken the check, and he has presented the check to our bank, and our bank has made the payment on the date of issue itself. This is a big assumption we make. I'll again repeat. We assume that we have issued the check, the supplier has taken the check, he has gone to the bank and he has taken money from the bank on the date of issue itself. Okay. When will the bank pass the entry? The bank will pass the entry customer account debit. Bank is not having any relationship with our vendors or our suppliers. What they'll do is simply they will debit our passbook and pay money to the suppliers or vendors to whom we have issued the check. So my account will be debited in the books of the bank. When will the bank pass the entry? The bank will pass the entry only on the date of presentation of the check. So when the supplier goes to the bank, or whenever the check is presented to my bank, only then the bank will pass the entry, and the bank will pass this entry only when there is balance in my bank account. Let us suppose I have only 10,000 in my bank account and I issue 1 lakh check. Bank is not going to make the payment for the check unless I have an overdraft facility. So if I don't have overdraft facility with 10,000 balance in my bank account, bank is not going to make a payment of 1 lakh. So only on the date of presentation of the check the bank is going to pass this entry. Let us suppose I've issued multiple checks. The suppliers or the vendors take the check and they forget to present it for payment. The bank is not going to pass an entry. The bank will pass the entry only when this check is presented to them for payment. The bank is not going to get dreams that my customer has issued some checks. I have to pass entries for that in my books of account. So I'll again explain here. On 7th April 21, I issue checks. The suppliers or the persons to whom I have issued the check go to the bank and try to collect their payment on 15th April, date of presentation. So what will happen is I will pass the entry on the date of issue, whereas the bank will pass the entry only on the date of presentation. In between this interval, there can be a difference in the balances shown in my books, in the books of the bank and in the books of the bank. There can be a difference between the bank account in our books and the passbook, that is the books maintained by the bank. And such differences are explained through a statement called as the bank reconciliation statement. We will have one more transaction here. Bank charges interest charged by the bank. So for services provided to us like check facility, cash withdrawals, cash deposits, etc., internet banking, remittance of money from one place to other place, the banks can charge some charges to us. So what the bank do is, the bank will debit our account, customer account, our passbook will be debited, and they will credit bank charges income for them or interest income for them. That account will be credited. So on the due date, whenever the bank charges are due or whenever the interest is due, the bank will record this entry. Now, when will we record? The businessman record. When the businessman comes to know that the bank has charged some charges, we have received an SMS or we have received a statement or we have received a message from the bank that some charges have been charged, then we are going to record it in our books. So bank charges or interest account will be debited because it is an expense for us. Because the money has been withdrawn from my bank account will be credited. So this is how I record the entry in my books. When will we record it? Only on intimation. So when the bank intimates me that they have charged some bank charges or they have charged interest or they have charged some other charges, only on intimation we record the entry. Okay. Or only when we come to know we record this entry. Again, let us say on 15th April, bank has charged some bank charges. Who will record the entry first? Bank will record the entry first in its books of account. I come to know on 30th April, that is the last day of the month, I go and take a statement. I come to know that some bank charges have been charged by the bank. Then the business is going to record an entry in its books. So what will happen in this interval is, because on 15th April bank has already charged some bank charges, my bank balance will fall, whereas my bank balance as per my books will fall only on 30th April. So up to 30th April my bank balance will be more as per my books, but as per the books of the bank balance will be less because they have charged bank charges. So there can be a difference. So my bank balance has fallen on 15th April itself because bank has charged bank charges, but I come to know only on 30th April. So in this interval, my books will show a higher balance, bank books will be showing a lower balance. The difference is explained through a statement called as the bank reconciliation statement. So before we take up problems on bank reconciliation statement, I would like to discuss few more journal entries. Before that, I would like the viewers to see the entries, learn the entries and see when the entries are recorded in the books of the business and the books of the bank. Learn them because this will help us to understand the bank reconciliation statement in a very easy manner. Thank you.